Hey, what's up, YouTube? It's Yemi here again from SwingTradeFX, and welcome to another powerful short videos. I'm about to educate you guys on something really amazing, profound. Because I've seen a lot of traders, make unnecessary losses, and just these losses are just avoidable losses, right? And in today's video, I want to tell you the difference between chart structure, entry confirmation, and candlestick. By that, I mean the reversal candlestick entry confirmation. Which of them is the best? Which of them gives a high probability trade entry? And which of them gives a much more confident, entry point for a trader? And I'm going to tell you guys why I use the chart structure entry confirmation for all my trades and how it has helped me a lot, save myself from so many trades, how it has boosted my confidence in my trading after 7+ years of trading. So sit back and relax and enjoy. Let's go. Yeah, so welcome back. Before we get into the teaching, I want to talk to you guys about, as you know, I've been using the fastbull.com website for all my news details and everything. And I want to introduce you guys. If you're first timer on this, hey, I want to put you on a website that gives you guys a real-time knowledge of how the market, the news and the market and economic data is. And all you got to do, as you can see, is go to www.fastbull.com, and here you have it. They have so much features, and that's why I love it. They have the news. They have a point of analysis. They have a new feature now, which is the AI signal, and they have the 247 news. This is the best feature for me because it gives me real-time news based on the pair I trade. As you all know, I trade just the pounds JPY, and I can be able to have an idea of what should happen during the week. And another thing I love is the economic calendar, and of all other features that you can find right here. So let's get into it. As you can see, this is what the real-time news looks like. This is where you get a release of each news you want. And the beautiful thing is that you can filter this news if you want, however you want your news to be. For example, I traced just the pound JPY, so I filtered my data to just receive information from the Euro economy and the Asian economy, right? You can literally just set it up to, top news, right? And other things you can find here is the economic data, right? Their economic data page I've been through a lot has been the best, because it gives you a filter of the news that you want. And but the most important thing is it gives you a data. Like I keep emphasizing on this, for people that trade sentiments in the market who use the COT data, as you know, this is very important for you, right? They kind of give an outlook of every single news and the impact it had on the pair. So this collects data for the past effect of whatever the news release is on the pair, and it gives you real-time data, so you can be able to track these data and kind of have an understanding of what you should most likely expect when the news releases out. Another pretty thing they have, because I know I have a lot of like followers from different part of the world, you can literally set whatever language that you want right there. And as you can see, so I urge you guys on, if you're looking for a news blog, this is far the best I use. They have real-time data. They have very fast news release abilities. It's just the best. So let's get back into what we got to do today. So yes, in today's video, we want to talk about the difference between chart structure entry confirmation and the reversal candlestick confirmation. Now, I want to give you guys a backstory, okay? I want to give you guys a backstory. When I started trading many years ago, I'm 7+ years trading now. So let's start this title. It's going to be a short video, but it's going to be powerful because I know a lot of people have been asking me questions. Candlestick reversal entry versus chart structure entry. And I typically use the chart structure entry for all my trades. So we want to know which of them is better, right? So far back when I started, I used to read on the reversal candlesticks and how they can give indications for change in momentum of prices, and how I can take that to my advantage, and I can use that to my advantage to actually find high probability trade entries, right? But over time, the market changes, right? And I realized that yes, I could find a demand zone, for example. So let's say this is a demand zone right here, right? And I have the markets making a move to as long as this point, and I find my entry based on the candlestick, reversal candlestick right here. I later end up with the market probably breaking and continuing in the direction, and it hits me out, right? I used to do all of this, and it's quite frustrating. And I know a lot of you that are watching right now can relate to this, right? And over time, I kept figuring out why, and why. And I couldn't get this right. And then with so much intense study of the market, I realized that there got to be a conservative way, because I'm a more conservative trader, right? I love when I have a sustainable means of trading. I take pride in, having an equity curve that is steady but yet growing like this, over an equity curve that will rise today, fall back tomorrow, rise tomorrow, fall back next tomorrow, and all of that, right? And I know that the number one goal of every trader is what? Consistency in profitability, because it adds up over time. The beautiful thing about Forex trading is it is it's a compounding system, right? You can literally compound anything, right? So yes, I figured out that there has to be other ways, right? Then I started to study the market, and after like about 2 years, I figured out that okay, maybe, just maybe, I need to understand the market from a structural point of view, and that changed everything for me, right? I'm going to show you guys what a structural entry looks like and how it can help your trading. I believe the candlestick entry is a weak entry, and also it does not give you the confidence. One of the things that helps a trader win is confidence upon execution. But if you enter a trade that you are not fully confident about the reasons for your entry, and it's more as if you're leaving things to the hands of luck, there's no way you can get better. There's no way you can build confidence over time that will help you to have sustainable income, that will help you to trade even higher accounts, right? This level you need to trade $1,000 account is different from the mindset you need for a 10,000, 100,000, $1 million account. So what makes the difference between all of this is your confidence level, your confidence in your system, being the fact that it has a consistent delivery upon when you apply it is what matters. So let's get into chart structure. So this is what, let's say this is a demand zone or a supply zone, as the case might be, right? This is what a chart structure entry confirmation looks like. When you want to find your entry after you've looked for an area of trade opportunity, right? You want to be able to understand and read the structure of the market, and wait until the structure of the market breaks before you find your entry and move in the direction of the market. Rather than waiting right here to just enter directly on a reversal candlestick, and then you end up having the market break above, and when it comes back again, you find your entry and it probably goes above again and you're frustrated. I want you guys that come across my channel to be very, very developed traders with regards to your execution, because at the point of execution is what defines a trader, because that's where your psychology comes in. That's where your knowledge of application of what you know comes in. Okay. So the chart structure is pretty much stable. And I'm going to be showing you reasons why, and I'm going to be showing you live charts, and I'm going to show you why. The chart structure entry is pretty much stable, because let's go to the next page. When you look at the fundamental principle of the market, price action, is that it moves in structures. And the moment where the higher lows, as we have it right here, and this is a why do we call this uptrend? Because of the higher lows and the highs. Am I correct? Because of the higher highs, the higher lows, the higher highs, the higher lows, the higher highs, the higher low. But in a situation where the higher low gets broken, what does that tells us? In the fundamental principle of trading chart structures, this gets broken. It tells you that something is happening at this point. And what is happening at this point? That the market has changed the structure. And that means we could be having a potential of structural change, which could open up an opportunities for us to enter into the market. So you want to be able to use whatever happened right here to find your entry at all times. And this is the whole idea behind structural break entry. Because the moment the structure break, I can be 90% confident that the direction of the market has broken, because price had violated what? All of this sequence that was moving on. It violated it right at this point, and it gave us a low. And anything that you see right there has now become a lower low, a lower high, lower lows, a lower high. That means the price went from higher highs. We have the high right here. We have the higher low right here. We have the higher low right here. We have the high right here. We have the higher low right here. We have the high right here. Sorry, higher high. This one too is also an higher high. Then we have the higher low right here. We have the higher high right here. We have the higher low. I spoke about this in my chart structure video. We have the higher high right here. If you've not watched it, you can see the link above right now. Then we have the higher high, equal level of high, right? Then what happened? The higher low got broken right here to give us a low that is lower than the previous low. Then we now have a what? A lower high. Okay? So this is the whole idea. So at this point of break, right here is what you want to be able to take advantage of when you are entering your trades, right? So that being said, let me give you guys advantage of chart structure entry confirmation. Aside from the fact that, number one, it is very stable and consistent, right? Number two, it is very conservative. And number three, which is the most important one, it helps in a trader's risk management psychology. Yes, I know you people will wonder why. I will show you guys real quick. You see, let's say we got a demand zone right here, right? Or a supply zone, as the case may be. Then we have the market coming to this level, right? And you're waiting for a reversal candlestick before you enter. And your idea is to put your stop loss above the reversal candlestick. You see, you tend, for someone who uses the candlestick reversal confirmation, you tend to set your stop loss based on the number of pips or your psychological level, which to me is not really that great from my experience in trading, because the market might finally get to move against you and hit you out. Or perhaps the market do not move against you, but you just chose a random number. This is my belief from my experience so far, that whenever you want to set anything, whenever you want to make a decision in the market, let the market gives you an instruction of what you do. This is what I mean. Now let's look. Let's say this is the reversal candlestick reversal confirmation. Now we want to make a case for chart structure reversal. So this is the chart structure, not just reversal. Let's just call it confirmation. So we have a supply or a demand zone right there, as the case might be. And then I have the market making a move. as you can see, right? And when the market got here, I waited to see what the market is going to do with the last low. And the market went as much up right here and finally comes to break. Now, what happens? I already got my area of entry. But now the market didn't just give me an area of entry, but it gives me an area of stop loss, which is what? Above the last high. So in this case, the market is giving me an idea of where I have to put my stop loss. Now, the beautiful thing about it is all I got to do is to measure the distance between my entry and my stop loss and use my position sizing skill to convert whatever the stop loss count is to whatever percentage of my account I'm willing to risk. You know, someone reached out to me the other time and told me about the fact that I have 65 pips stop loss and I'm going for like 300 pips. That, oh, that's a lot of pips. Well, I said that's a lot of pips within the context of pips. But within the context of risk reward, that is 1:5. And that's why I'm a swing trader. However, my risk does not increase by the number of my pips. My duty as a trader is when I enter based on my chart structure confirmation, I measure the number of pips. If it is 55 pips, if it is 40 pips, if it is 30 pips, my goal is to convert this pip value into the risk value I'm willing to risk. So if my rule says I'm only risking 2% of my account, if my risk say that when I put my stop loss right here, it has to be 2% of my account, my duty is now to convert all of this, right, into this 2% by a skill I call position sizing. So now you can see that I do not just execute trade randomly. I do not just take a random figure and assume that, okay, I'm going to use 10 pips stop loss, I'm going to use 20 pips stop loss. I trade in a much more stable and conservative form, which means I allow the market to give me the number of stop loss I have to use based on me placing my stops behind the highs and lows, so that I'm doing two things at the same time. I'm letting the market define to me, dictate to me what I got to do. The second thing I'm doing is that I'm putting my stop loss at a point where the market will be able to breathe. If the market gives me a confirmation right at this point, okay, if the market gives me a confirmation right at this point and it goes against me to hit this out, then I know that the direction is not clear. I know that the direction is wrong. That means the market is giving me a continuation of upward trend. But anything that makes the market to confirm from this point right here, there's high chances, right, that the break of structure as regards the original fundamental principle of the market, that when a higher low breaks, right, that there's bound to be a lower high and a continuation to the downside. So I put myself at an odd of taking high probability trades and setting my stop loss in such a way that my stop loss do not easily get hit. And at the same time, regardless the number of my stop loss count, I can use my position sizing to convert it into the percentage I want to risk. For example, I do not risk beyond 2% of my account. So my goal is that whenever the chart structure entry confirmations gives me the point of where I have to put my stop loss, sometimes it could be 50 pips, sometimes I could see 1:4 pips, which is risking 20 pips for 80 pips. Regardless of whatever the value of the pips is, 20, 40, 60, 10, 5, my goal is to convert this into the same risk value, 2%. And this is the beauty of chart structure. So let me go on the chart now and show you areas where chart structure entry is good. Now, I want you to look at this trade that I shared in the last video that I uploaded, right? I said this was my area of this is my zone of reversal, basically. And what was I waiting for? Did I enter this market when this market gives me a rejection right here? Look at it carefully. I never enter upon rejection because I know this is very weak. if I'd entered right here, now look at it. Let me zoom it out so that everyone can see it. And I want you guys to learn. This is a valuable knowledge you will not get anywhere. If I'd entered based on this, right? Look at this. This is a very good reversal candlestick. And after on, you see a bullish engulfing candlestick. Bullish engulfing, sorry, candlestick. It happened, right? But what happened within the next two candlesticks? They came even lower. So if I set my stop loss right here, I would have probably be hit out right there. That is not the best way to trade the markets. But look at something really interesting. I waited for the formation, right? At the time, I had this higher level right here. I waited for the formation of what? A change of structure, structural change. And the moment this breaks right here, what did I do? I found my entry and I put my stop loss right here. Now, it becomes my duty now, before I execute this trade, to use my position sizing skill to convert how many pips is the stop loss, right? After the market got to this pip. Below this level is about 74 pips. So your stop loss is not set. The risk you take is not set by how wide your stop loss is, but rather your risk is set by what you choose as your rule to risk per trade, which is 2%. So my goal is, how do I calculate 74 pips and convert it into 2% of my account in such a way that when I execute my trade right at this point, right, and I put my stop loss right at this point, right, it is going to be 2% value of my account, so that by the time I hit my TP at 1:3, 1:4, I'm going to make 4 times 2% of my account that I raised, which is 8%. At a professional level, this is how you must trade, right? And I want you to go into the market and look for every point where you have to trade with structural confirmation. I remember that I took this trade, I sent it to my Telegram community, right? If you're not in my Telegram community, you can check the link in the description. After this break, what did we do? You know, this was the retest. The break of the structure confirmed the fact that higher lows, higher lows, higher lows, higher lows has been violated. And now look at what happened. Lower highs happened. My stop loss was right above this point. So my goal is to convert the figure of the stop loss, which at the time when I took this trade was about 56 pips. I was targeting about 1:2, and convert it into what? 2% of my account. 2% of my account. So it's not that my risk changed by how wide my stop loss is. I do not choose what my stop loss is. I allow the market to choose it for me because of my entry confirmation, which is the chart structure entry confirmation. And it is my duty to convert this 2% into what I'm going to be using. It's my duty to convert these numbers of pips into the 2%, which personally I love to risk. Okay, so chart structure confirmation at any point in time is king, because everything that the market is centered on is subject to the principle of chart structure. Everything that makes the market moves is chart structure, right? You can see lower high, lower high, lower lows, lower high, lower lows, lower highs, lower lows, lower highs, lower lows. And what happened? The moment it got broken right here, what does it mean? A higher high, higher low starts to form. Now, this is the whole idea. If you can use this to your advantage, not just to analyze, but to find your entry, you have put yourself on a spot where you continue to make consistent profitability in your trading. And this is why everybody see that I make consistent profit. I make it very clear in my Telegram group. I make consistent profit because I understand and I value the principle of letting the market dictate what to do for me. I do not impose my feeling. The market does not care about my feeling. The market does not care about what I see. My duty is to respond to what the market said I need to do through the lens of my trading system. Part of my trading system is what I use, the chart structure entry confirmation. And I hope someone have learned from this video, right? If you want to learn more from me, you can subscribe to my mentorship group via the link in the description. You can check through my Telegram channel and you're going to have access to text me directly. Also, I would be hosting a bootcamp coming soon this December, right? The bootcamp is usually 3 days crash course from beginners to advanced level. We're going to be together 3 days, and I'm going to be teaching you everything I know, from strategies to risk management to trade management, to trader psychology, to the importance of journaling and how to use journaling to maximize your profit, right? It's going to be 3 days camp, right? Where we're going to be coming together discussing Forex, where you will have a one-on-one experience with me for everyone. So I'm going to be releasing the details later on my social media page, on Instagram, on my Telegram, and I want everyone to be part of it. A whole lot of people who will be watching this video have been profitable from my last bootcamp I held sometimes this year. And it's that time of the year again, December. Use it to seal your year very well. You know, learning these skills the right way. You don't have to lose money. Forex is simple. If there's anything, I've demonstrated it on this channel that Forex is simple. I've simplified to you. It is not hard. It is not technical. Don't mind the people selling you this idea that Forex is high, it's so technical. You got to be technical. You don't have to use any indicators. I've never used indicators. All you need are specific knowledge and how to apply them. And if you can see it through the lens of someone that's been in the market for a long time, you know, and as you can see, you will be able to simplify the Forex market just like me. The goal is to make what seems technical to be simple. That is the vision of SwingTradeFX. And thank you guys so much for watching this video. And I promise to drop one video every week for the rest of the year, because I have more free time to my hand right now. Thank you guys so much, and have a wonderful rest of your week.